Hola a todos, ¿qué tal estáis? Bueno, bienvenidos a una nueva edición de nuestro gran evento internacional, Finect Best Investment Opportunities Summit, ya conocido como Finect BIOS. Este es un evento que nació en pleno confinamiento para acercar a los gestores y a los inversores y que vaya por la sexta edición. Este Finect BIOS llega en un momento además muy especial, en el que todas las tensiones que estamos viendo, todas las tensiones geopolíticas y el cambio de ciclo de los bancos centrales llenan de incertidumbre la evolución de los mercados. Bueno, tan especial que de hecho hemos tenido que cambiar la agenda en el último momento. Vamos a hacer 3 días y vamos a tener 4 días, 4 días para que conozcáis muy buenas ideas. También resulta especialmente porque en estos momentos es donde más valor tiene conocer las ideas de inversión de las principales gestoras internacionales para intentar obtener rentabilidad para nuestro dinero. Esta edición de Finect BIOS mantiene su esencia, pero trae novedades para hacer aún más interesante el evento. Seguirá igual nuestra idea de conocer de primera mano 7 estrategias que nos traerán sus gestores desde las principales plazas financieras internacionales: Nueva York, París, Silicon Valley, Frankfurt y Luxemburgo. La evolución de Finect BIOS 6 llega por 2 vías. Por un lado tendremos 4 sesiones, como decimos, eso sí, más cortas. En concreto, hoy, mañana, miércoles y jueves, a partir de las 17 horas, conoceremos las distintas ideas de inversión. Hoy, 2 de ellas. Este martes, otras 2. El miércoles 2 más y cerraremos el jueves con la última. Será de temáticas tan diversas como tecnología, como inteligencia artificial, como robótica, transición energética, innovación en la movilidad y, por supuesto, también opciones para encontrar rentabilidad con mucha menos volatilidad, como acciones estables o renta fija flexible. Damos las gracias a los partners que van a participar: Allianz Global Investors, BNP Paribas Asset Management, BNY Mellon Investment Managers, Carmignac Risk Managers, Franklin Templeton, Natixis Investment Managers y Nordea Asset Managers. Cada uno de ellos tendrá 15 minutos para contarnos su visión. Cuando acaben sus ponencias, iremos subiendo sus presentaciones al grupo de BIOS en Finect, al que podéis acceder tecleando en vuestros navegadores www.finect.com/BIOS. Ahí también podréis encontrar, por cierto, más información de los ponentes y de los fondos que cada uno de ellos va a ir comentando con nosotros. Por cierto, también podréis acceder a esos fondos con el código QR que vais a poder ver en pantalla mientras cada uno de los gestores realiza su presentación sobre su estrategia de inversión en estos momentos. Bueno, esa era una de las novedades. Por otro lado, tras cada una de las ponencias contaremos aquí en el estudio con la presencia de asesores y selectores de fondos que podrán hacer sus preguntas a los gestores y comentar sus ideas de inversión. Contaremos con expertos de AIG, de Avante, de Arquia, de ATL Capital, de BVA, de Cobalto, de Mutuactivos, de MyInvestors, de Renta 4 y de Singular Bank. Gracias también a las distintas asociaciones de profesionales que apoyan esta iniciativa: EFPA, ASEAFI y CFA Society Spain y el Instituto Español de Analistas Financieros. Por supuesto, también a todos los que vais a seguir online estas ponencias. Esperamos que disfrutéis de esta sexta edición de Finect BIOS. ¡Empezamos! Bueno, pues vamos a conocer ya la primera idea de esta sexta edición de BIOS con nuestro gestor invitado, pero antes dejadme que presente, ya sabéis, esta novedad que tenemos en este BIOS, que nos acompañan 2 expertos, aquí 2 invitados también en plató, que nos van a ayudar a hacerle preguntas a nuestro gestor. Así que lo primero, pues daros la bienvenida, agradeceros que estéis hoy especialmente con nosotros aquí, así que muchísimas gracias. Diego González, ¿cómo estás?
Muy bien, todo muy bien, con ganas de escuchar al gestor.
Diego González, asesor en Cobalto, inversiones, y vamos, seguidor también del mundo de los fondos y de la selección de fondos, o sea que seguro que van a ser preguntas muy interesantes. Y Victoria Torre, ¿qué tal, Victoria? ¿Cómo estás?
Encantada de estar aquí.
Encantados nosotros, responsable de oferta digital en Singular Bank, así que si estáis listos, pues vamos a ir ya mismo a conocer la primera idea de inversión de este BIOS 6, conociendo un poquito mejor al gestor.
Iniciamos este BIOS 6 volando hasta París para saludar a Alexandre Silio. Desde allí busca las mejores oportunidades que brinda el auge de la inteligencia artificial y la robótica. Sin duda le ayuda su pasión por la tecnología, se considera un auténtico geek y en su tiempo libre se divierte con los videojuegos. Le encantan las novelas distópicas y preparar un buen cóctel para los amigos. Alexandre, el escenario es tuyo.
So hello, everybody. I'm very pleased to be here today with you. We are here to talk about the AI and Robotics Fund of Thematics Asset Management. And maybe to begin with, we could start with the investment philosophy of Thematics Asset Management. So on the slide, you should see that we have 4 pillars within our investment philosophy. The first one would be about secular growth, which means that we try to identify thematics that will drive higher growth than the global economy for the next several or even decades, several years or even decades, which is the case, we believe, for our, for example, water strategy, safety, AI and robotics, obviously, and the others that we have in-house. The second pillar of our investment philosophy is the fact that we are focused, which means that we have some kind of a narrow investment universe, which is around 250 companies usually, and which means that we prefer to know a lot about a small piece of the market than knowing a little bit about the whole market. So we are focused on our expertise. The third one would be the fact that we are unconstrained, which means that we are pretty free when it comes to managing our funds. We have no sectorial limitation, market capitalization limitation, or geographical limitations, which means that we are basically free to do what we want within our thematics. And the final one would be the fact that responsible investment, so ESG, is directly included in our investment process and is part of the way we run our due diligences on companies. If we take a look at the next slide, we can talk about the investment case of the AI and robotics team. So next slide is about the resume, let's say, of the investment opportunity. So the first part is about the fact that we have more and more connected devices which create a lot of data. They generate a lot of data. We will see later how big it is. And this big data is being used to somehow feed the AI algorithm. Those algorithms, those models, they train on those huge sets of data. And the more they get data, the more they are becoming, let's say, useful for us. We can run, for example, predictive models to help us try to anticipate the future, for example. And this is all made possible by the fact that we have made a lot of progress, and we will keep on doing so in terms of computing power. So if you take a look at the next slide, it is a graph that gives us an idea of the growth over the coming years of the numbers of connected devices in the world. So basically, we find that it should grow around 18% annually until 2025, with several billions of connected devices that will generate, as we have already discussed, huge amounts of data. So on the next slide, you have an illustration of the amount of data that we will be generating and that we have generated in the past. So you can see that, for example, in 2020, we have generated close to 50 zettabytes. Actually, this figure isn't accurate. It is 64, the actual figure. So we have generated around 64 zettabytes of data. So to give you an idea, 1 zettabyte is the equivalent of around 250 billion DVDs in terms of storage capacity. So you multiply that number, 250 billion, by 64, and you have the number of the amount, of data that we have generated in 2020. But the most important part here is not the past, it's the future. And as you can see on the graph, this figure will probably triple in 2025, and it will more than be multiplied by 10 times in 2030. So here again, we have an exponential growth pathway in the future for the amount of data that will be generated. And it will be generated by us, by our human activity, be it in the professional space or in the personal space, and also by machines that are each time more connected. You can think of robots, for example. So if you take the next slide, it is about the computing power that has evolved a lot over the last decades. So basically, if I try to stay short on that side, we have basically multiplied the computing power by a factor of 1,000 each decade, and we believe that it will be the same for the coming years, which again enables the AI theme and also the robotics theme. On the next slide, to address a little bit more the robotic space of the universe, we have seen a great evolution over the past decades. So basically, when robotics and automation really started in the 60s, robots were pretty simple devices, what we call mechatronics devices. So a combination of mechanics and mechanical and electronics devices. Those robots were basically anchored to the ground. They were heavy to program, difficult to program, and they were only able to execute simple and limited tasks. And over the years, we have seen that robots have evolved into much more complex machines and systems. So they have now vision systems embedded. They are able to plan their paths within a warehouse, for example. They are able to locate themselves. They are also able to communicate with the other robots. And as of today, we have also seen that they are each time more embedding artificial intelligence so that they can, for example, learn from us. They can learn from imitation, by imitating the way we work, for example. So it really made sense for us to combine the artificial and robotics space for that reason, because both of them are basically converging. And it is also interesting, we believe, in terms of investment, because it gives us more diversification. So you have the AI part of the portfolio, which is much more about software, for example. And then you have the robotics part of the universe in the portfolio, which is not following the same logic. You have more cyclical companies that are more exposed to capital equipment spending, for example. So it gives us more diversification for the portfolio. So on the next slide, you will see that we have broke down our investment universe and the portfolio in 6 segments. So the first one would be about factory automation. So basically, you would find companies that are involved in industrial robots, in logistics automation, and also the concept of Industry 4.0, which is basically the fact that we are connecting our plants, or our warehouses, or distribution centers. In this segment, you would find companies that are in Japan, for example, such as Fanuc, Daifuku, Yaskawa, but also players in Europe or in the US, such as Rockwell Automation for the US part, or Cardex for or ABB for the European part. The next segment of our universe is design software. So this segment is really about software for engineers mainly, that helps engineers to develop products and to build them digitally by, for example, creating a digital twin of the product they want to design. So you would find companies such as Dassault Systèmes in Europe, Autodesk in the US for architecture and construction, and also companies such as Cadence Design for the semiconductor industry. Then you have the segment of medical automation, where you would find most of the players that you would find here are about robotics. So you would find, for example, surgical robots with a company such as Intuitive Surgical. You would also find a lot of players that are involved in the automation of labs, be it for research purposes or for diagnostic purposes. And also some what we call intelligent diagnosis companies, for example, companies that are able to use AI to detect a pathology that might have affected a patient, for example. And the final part of this segment is what we call in silico research, which is basically software platforms that use AI to find new therapeutic areas, to find new applications for existing molecules, thanks to the huge computing power that those software platforms use. Then you have the consumer and services automation segment, which is somehow our B2C segment. So you would find, for example, everything that is related to household automation. So you can think about a company such as iRobot, which is the global leader in terms of autonomous vacuum cleaners. You could also find all the companies that sell smart assistants. You can think of the ones of Google and Amazon, for example. Then you have all the players involved in the autonomous vehicle space, even though we believe the opportunity has not really started to materialize. It is still a little bit far away from today's capabilities. And the final part of the segment would be financial services. So basically, those companies are providing financial services, such as, for example, credit lending or insurance, that are based on AI algorithms that helps to, for example, determine the risk profile of a customer. You can find companies such as Lemonade or Upstart in that space. Then we have the office automation segment, which is really the software and B2B part of the portfolio. So you have, for example, front office software, basically software that would be used for sales, marketing, or services purposes. A good example could be Salesforce. You have also companies that are involved in cybersecurity. So for example, a company such as CrowdStrike, which has really built an AI model that helps to detect and to respond to cyber threats. You would also find companies that are involved in robotic process automation, which is basically the fact of automating, let's say, repetitive tasks in an office setup. So you can think of companies such as Blue Prism or UiPath in the US, for example. And the final part of this segment is the analytics part. So basically companies that try to put data in motion to detect trends, patterns that could be useful for business purposes. So you can think of a company such as Snowflake or MongoDB, for example, that provide databases or data warehouses services. And then the final part of the investment universe is the supply chain. So basically, you should think of this segment as the enabling segment of our team. So basically, you would find technologies that make the AI and the robotics technologies possible. So you would find semiconductor company, for example, that provide the computing power needed to run AI models. So companies such as AMD, NVIDIA, for example. You could also find companies that are much more involved in what we could call analogic semiconductors. So, for example, sensors that would be used in autonomous driving or for robotics purposes. You could find companies that are also selling vision systems, such as Keyence or Cognex, for example. And the final part would be the equipment providers. So people that sell, for example, machines that would be used in the manufacturing of semiconductor. A good example of that could be ASML in Europe. So If we take a look at the next slide, which is the top 10 of the portfolio, it is interesting to see that we have different companies that are exposed to different end markets. So you would find companies that sell, again, semiconductors. You would find companies that are involved in the software space. You would find companies that are involved in robotics, be it for industrial purposes or for medical purposes. So it gives us a lot of diversification in terms of end market exposure. If we skip the next slide and go directly to the performance slide, I would just like to highlight the fact that since inception, we have been able to outperform our reference index, which is the MSCI ACWI net return, obviously. But also what is interesting to me is the fact that in some of the markets the drawdown that we have seen over the last years, the fund has been sometimes able to outperform the market. So if you take the example of the February to March period in 2020, when basically the pandemic exploded, the fund was able to outperform the market by close to 2 points. So the MSCI ACWI was down by, I believe, 33%, and the fund was only down by 31%. And this is also due to the fact that we have been able to somehow make some arbitrage within the portfolio. So maybe trying to find more defensive exposure, for example, in the medical space, while we have been taking profits, for example, in more, let's say, cyclical sensitive companies that would be involved in the robotic space. So this gives us, again, some flexibility when it comes to facing different market environment and different market conditions. I guess this is all. We can go on to the Q&A session.
Pues muchísimas gracias, Alexandre, por tu presentación. Vamos a ir ya con las preguntas. Aquí en el estudio están esperando ya para hacértelas. Vamos a empezar, si os parece, con Diego González de Cobalto. Diego, adelante, tu pregunta para Alexandre.
Yo lo que le preguntaría al gestor, vemos dentro de la composición, de las primeras posiciones del fondo, que bueno, hay temáticas desde empresas de CRM, empresas de microprocesadores, etcétera. No son empresas puras en el sentido de inteligencia artificial como tal. ¿Por qué no hacer un fondo que realmente contenga temáticas más puras en ese estilo? Porque al final todas las industrias de alguna manera están haciendo uso de esa inteligencia artificial, ¿no? Y por último, relacionado de alguna manera, ¿por qué esas empresas que ha seleccionado el uso de la inteligencia artificial le está ofreciendo una ventaja respecto a sus competidores?
All right, thank you for your question. So maybe I can address it in two ways. The first thing is to remind you that we only invest in companies that provide services and products that are based on AI. We are not investing in companies that adopt the technologies. For example, we wouldn't invest in a bank which is in the financial services space. I mean, there are lots of players that are using AI, but they are not developing it by themselves. So this is the first point. Then you mentioned the fact that we are investing in companies that do, for example, microprocessors. And this is not really pure AI, sorry. Yeah, we agree with that, but this is part of our universe. This is a segment that we call the supply chain segment, which is basically all the technologies that are enabling our team, the AI and robotics team. And in order to have AI, you need computing power, so you need processors. And in that sense, a company like NVIDIA falls into that category and develops GPUs, so graphic processors that are used to accelerate servers to do AI. So without this technology, you wouldn't be able to build, let's say, interesting and relevant AI models. So that's the way we see the investment. This is a specific part of our segment. We recon that, but those are the enabling technologies. And then you mentioned some companies in the software space. It is true that some of them have not, let's say, 100% purity. But if you take the example of Salesforce, there is a clear AI, let's say, engine behind their solution, which can make basically recommendations for the people that are using the software to push a specific product, for example, at a specific time to a specific customer, depending on the patterns that the AI engine might be able to recognize.
Mm-hmm.
And by the way, maybe to answer the purity question, we have tried to assess the purity level of the portfolio, and it is close to 80%. So meaning that the exposure in terms of revenue or profits of our companies to the theme is close to 80%, yes.
Uh-huh. Vamos con Victoria.
En línea con lo que decía Diego, es verdad que hemos visto cómo la cartera está bastante diversificado por tipología de compañías, pero nos gustaría preguntarle al gestor por sectores donde considera que de aquí al futuro va a poder aprovecharse mejor de la robótica, de la inteligencia artificial, si tiene alguno de estos sectores identificados que consideran que en los próximos años van a acelerar estos procesos y por tanto se pueden ver beneficiados. Si hay logística, salud, están mirando algún sector más en concreto.
Okay. We are not taking any bias in terms of sectors. We are really stock pickers, so we rather focus on the fundamentals of our companies. But there are a few interesting, let's say, segments or sectors that have some appeal in the mid to long term. You mentioned logistics. It is true that we are seeing a lot of innovation and also a need for automation. Especially in that context of wage inflation or shortage of skills for manufacturing or logistics skills. So we have seen an acceleration in the demand for such solutions, so which is pretty interesting for us. But as you mentioned also, we are seeing a lot of development in the healthcare sector. And I can mention one maybe, which is what we call in silico research, which is somehow complementary to what we can call in vivo or in vitro research. So basically, you use the computing power, so to see. That's why we call it in silico. It refers to silicon, which is one of the raw material used to produce semiconductors. So basically, you would use the computing power, so supercomputers, to screen thousands of molecules to find new therapeutic areas, to also transform those existing molecules, to build new ones, to try to develop new therapeutic areas for such molecules. And this is a very interesting and quite strongly growing investment space, even though let's say this subsegment is not yet mature, because most companies have basically no products on the market yet. They are in different phases of the clinical trials. But it is a very interesting space for the future. And we have also seen some interesting development in the collaborative robot space. So those are smaller robots that you when you compare to the, let's say, traditional industrial robots, and those robots have different advantages. That they have been designed to work with us. As being humans, they are cheaper than their peers in terms of industrial production. So that means that they can be bought by smaller companies, and actually their integration and implementation and programming is also way easier than the big, large robots that you find, for example, in an automotive plant. And what is interesting in that space is that let's say the penetration level of such robots, so the collaborative robots, the cobots, is pretty low. The leader in the field is Universal Robots, which is part of Teradyne, a US company. And they estimate that there is less than 3% of penetration of adoption of this technology. So it leaves room for growth for the next coming years and probably the next decades.
Ok. Siguiente pregunta, Diego.
Sí, al final, bueno, es una cartera muy diversificada sectorialmente hablando. Entiendo que cada sector tiene sus propios múltiplos tasas de crecimiento, pero dentro del proceso de construcción de cartera de esas 45 posiciones, ¿hasta qué punto el tema de la valoración es importante cuando marca un punto de entrada y cuando se sale de una compañía? ¿Qué criterio de salida desde el punto de vista de valoración? Es decir, ¿cuándo se considera que es cara o que ha llegado a un posible precio objetivo, ¿no? Y por último, relacionado con esto, en términos globales de cartera, ¿qué qué valoración tiene actualmente y en histórico, si es un momento en relación a la media histórica, está por debajo, por encima, es un buen momento de entrar en términos de valoración, o es una métrica que a lo mejor es secundaria o tiene poco sentido dentro de esa toma de decisiones.
Okay, I'm not sure I got the first question, so I'll try to answer it. And if I'm not answering it properly, you tell me. So in terms of the way we manage our positions, so basically we are building our own valuation models, so which means that we have our own target prices, and it is a mix of multiple valuation using peers valuation, for example, and also a more, let's say, long-term valuation that is based on the DCF model. So we do our own calculation in that sense, and we have our own target prices. And then we have the investment process that tells us basically that depending on the quality of the company, it will fall within a range of it might be from 1 to 5% in terms of weight in the portfolio, and then whether it will be on the low end of that range or on the higher end of that range will depend on the upside we have on the stock. And then in terms of the buying and selling policy, the closer we get to the target price, the more eager we will be to take profits on the stock. But when we reach a target price, it doesn't really mean it is not, I mean, mandatory that we sell the position, as long as we believe that the fundamentals are still there, that the growth might still be there for the next years. We will just lower the position, the weight of the position, but we will probably not exit it. So because again, we take a very mid to long term approach. We like to have our companies in the portfolio for, let's say, at least 3 to 5 years. That's the ideal scenario. So in that sense, we will try to compound over the years the growth that the company can deliver in terms of benefits. And then you mentioned the valuation at the portfolio level. It is quite interesting in that specific context of inflation and rising rates. So what we have seen over the last weeks is that the portfolio is currently below the valuation that we had just before the pandemic. So basically, we have, let's say, completely erased the inflation in multiples, in valuation multiples that we have seen during the pandemic, that was somehow supported by the monetary policies of most central banks. So that part of excessiveness somehow is now over. So we are now trading, if you take the EV to EBITDA multiple, we are trading at a little bit less than 19 times, which is below the average since inception. So we really feel like the opportunity to start to add more on our holdings is there. Albeit we know that we might, let's say, we might face a little bit of volatility going forward, because it is still unclear how fast central banks will raise rates. It is still unclear how the Ukrainian situation will evolve. So there are still risks, but fundamentally we have seen that our company are doing great. Results are not degrading whatsoever, and valuation are coming back to more normative levels. And actually, we've done an exercise to try to take a look at each valuation, at each position within the portfolio, looking at their valuation 5 to 6 years ago or 4 years ago, when the US 10-year yield was much higher. It was close to 2.5–3% during that period. And we have seen that most of our companies are below their valuation. Sorry, it's below the levels that they had at that time. So again, it feels pretty reassuring for us to on the valuation side.
Victoria.
Pues yo le quería preguntar, como le iba a preguntar lo que le ha preguntado Diego, he pensado en otra pregunta que también podría ser interesante conocer, y es si considera que hay más oportunidades en aquellas empresas de robótica o inteligencia artificial que son los que la desarrollan, o que puede haber más oportunidades en aquellos que la aprovechan, que adoptan este tipo de tecnología para el desarrollo de sus negocios.
That's a very good and interesting question. We believe that the company that develops such products or services will be the main benefiters from this trend, from this technology adoption. So we believe, and those guys will grow faster than the rest of the economy. If you take for example, if we compare the growth of the portfolio, be it for the top line and the bottom line, it is basically 100% higher than what you can find for a global index, such as the MSCI ACWI. So we capture that growth, and we believe that that's the best way to capture it. But when it comes to adopters, it is true that at the beginning of the adoption of such technologies, so AI and robotics, it can make quite a difference and somehow build a competitive moat for companies that adopt it quicker or earlier than the others. But in the end, we really believe that AI and robotics will be pervasive in almost all the sectors within our economy. So at the end of the day, it is not sure that it will be a differentiating factor that will be enough to create an economic or competitive moat with your competitors. So again, we still believe that investing directly in the enablers of such technology is the best way to approach it, yes.
Ok, Alexandre, pues muchísimas gracias. Nos hemos quedado sin tiempo. Ha sido un placer conocer tu visión, esas perspectivas del mercado de la inteligencia artificial y la robótica y, por supuesto, responder a las preguntas de nuestros invitados aquí en el estudio. Muchísimas gracias, Alexandre.
Thank you. Have a great day. Thank you. Bye-bye.
Por supuesto, muchísimas gracias tanto a Diego como a Victoria por vuestro tiempo, por haber estado con nosotros. Muchas gracias.
Gracias a vosotros.
Gracias.
Change. To Franklin Templeton, it means saying hello to new opportunities, hello to new ways to progress, hello to making things better. It's hello to empowering advisors and their clients with new technology, to using that technology to improve how portfolios are managed, easier access to expertise around the world. It's the best of both worlds in one place. And because we don't look backwards, we never stand still and are always moving forwards, we're saying hello to a better future for our clients, our employees, and the world. Hello, progress.
Pues vamos a conocer ya la segunda idea de esta edición de BIOS, la sexta edición de BIOS, ya veis, vamos a llegar hoy al final de esta primera jornada con una idea que también me parece que puede ser muy interesante en estos momentos que estamos viendo. Ya sabéis cómo funciona. Primero vamos a conocer a nuestros selectores que me acompañan ahora en el estudio para pasar después a conocer esa idea de inversión. Así que saludo primero a Álvaro de la Rosa. ¿Qué tal, Álvaro? ¿Cómo estás?
¿Qué tal, Vicente? Muchas gracias por la invitación.
Nada, gracias por estar con nosotros. Álvaro es selector de fondos en Avante Asesores. Y Jonás González. ¿Qué tal, Jonás? ¿Cómo estás?
Muy bien, gracias, Vicente.
Jonás, selector de fondos en Mutuactivos, has estado con nosotros más veces, estamos encantados también de tenerte con nosotros.
El placer es mío, Vicente.
Muchísimas gracias a los dos. Si estáis listos, vamos a escuchar la siguiente idea de inversión, conociendo un poquito mejor a nuestro invitado.
Volamos ahora hasta San Mateo, California, para encontrarnos con Jonathan Curtis. A distancia de patinete del gran núcleo mundial de la innovación tecnológica, sigue muy de cerca todos los avances tecnológicos para encontrar oportunidades de inversión. ¿Será uno de ellos el metaverso? Mientras lo analiza, eso sí, le gusta deslizarse por la nieve real practicando esquí, una de sus grandes aficiones. Te escuchamos, Jonathan.
Jonathan, tiempo para ti.
Great. Well, thank you for having me today. I'm excited to talk with you about what we are doing in the Franklin Technology Fund and the big opportunities that we see in the space. So first, let me start by introducing myself. My name is Jonathan Curtis. I work at Franklin Templeton in a part of the organization called the Franklin Equity Group. And in that group, I have a number of responsibilities. First and foremost, I'm the lead manager for the Franklin Technology Fund. It's about a $10 billion fund focused on the big opportunity around digital transformation, which I'll speak more about. I'm also the team lead for the Franklin Equity Group in the technology space, so all the analysts responsible for covering various parts of the technology space are on my team. And then finally, I'm also an analyst, so I'm responsible for covering companies in the infrastructure software and technology hardware spaces. So we think the big opportunity in technology is this idea of digital transformation. Please go to the next slide. We think that this opportunity is very significant. We believe that companies, governments, various industries are in the very early stages of using software and data to better understand their customers and their business processes, and then technology to radically transform how their industries operate. And then underneath that big idea of digital transformation, we've identified 10 supporting sub-themes, which I'll go into in more detail later. But these include things like AI and machine learning, cloud computing, software as a service, Internet of Things, and 5G. All of these supporting sub-themes are in support of this big opportunity around digital transformation. So the fund is anchored to digital transformation and then seeks to own only the best ideas associated with each one of these sub-themes in support of digital transformation. The strategy takes a very long-term view of the markets. If you look at the top 20 positions in the portfolio, they've all been in the fund on average for more than 7 years. So I think that's real evidence that we think very long-term. We also have a unique advantage in that we have our entire team located in Silicon Valley. Now, certainly we understand that innovation is happening on a global basis. Tremendous amount of innovation comes out of Europe, out of the Middle East increasingly, certainly in Asia. But Silicon Valley is unique because the world's largest technology companies are headquartered there. Still, more than half of the world's venture capital is deployed there. And that gives us tremendous access to not only these leading public companies, but also many of the emerging public companies and the private companies, and then that network of venture capitalists that are financing these companies. The strategy is also unique in that it doesn't just invest in public companies. About 95% or so of the strategy is in public companies, but about 5% of the strategy is in later stage, very promising private companies, companies that we would want to own if they were public, companies that we are eager to start the learning on prior to our peers, so we can figure out if when that point of liquidity becomes available, whether we want to scale those positions ahead of our peers do. And then finally, the strategy's been around for more than 20 years. I've been associated with it either as an analyst or as the lead portfolio manager for the past 14 years. But the point is that it's been around for a very long time. And with that, we have really honed our processes, learned how to do this work, and that is why we've been able to deliver this really strong performance over the past many years. Next slide, please. This is probably my favorite slide in the deck because it highlights the people who are responsible for the construction of the portfolio and really the successes we've had. So two things to consider here. First off, it is a very large team. So unlike many of our peers who have smaller teams supporting them, we have 12 analysts that are currently contributing ideas to the portfolio. That means that we can get into various nooks and crannies of the technology space and find ideas that our peers maybe are not aware of or just simply don't have the resources to go after. But secondly, it's also a very experienced team. On average, the analysts in this team have more than 16 years of either investing and or industry experience. So that means we know the players in the space very well. We know the cycles very well. We've gotten into these themes very, very deeply. So just a tremendous amount of expertise in the team. Next slide, please. So when we look for ideas, we use 3 big screens for getting ideas into the portfolio: growth, quality, and valuation. Of the 3 of these, we think the most important is quality. We want to own companies that have some unfair, sustainable, and competitive advantage that they can continue to exploit for many, many years. We want to own businesses that are led by strong management teams that can operate in a variety of different market contexts and adjust as they learn more. We want to own companies that have either demonstrated financial strength, or when we dig under the covers, we see evidence of building financial strength that ultimately will generate good returns and a cash flow profile for investors. The second consideration is growth. We want to own companies that can grow and grow and grow for multiple years. So you're not going to find in the portfolio what I would call one-hit wonders, companies with either a single product or a single geography that they're going after. We want to own companies that have multiple products. We prefer companies that act like platform businesses where the various products combine together into something bigger. And we want to own companies that are going after multiple geographies. We don't want to own companies that are focused on a single geography or a single part of the world. And then finally, on valuation, we as growth investors are always looking out to understand what will these businesses look like at maturity. So we use the discounted cash flow model to understand the various scenarios that we are underwriting. And the most important part of our discounted cash flow analysis, of course, is the terminal value. Again, what will these businesses look like at maturity? How big will they be? How profitable will they be? And then we pressure test our models, given all the fundamental information we've collected, to look at these companies across a base case scenario, an upside scenario, and a downside scenario to really understand, again, what we're underwriting in the business. Next slide, please. This is just a quick review of where we are from a valuation perspective in the markets. So this shows the price to earnings multiple on the subsector of the S&P 500 that is technology, compared with the overall price to earnings multiple on the S&P 500 for the past 30 years. So the blue line is that ratio of those two price to earnings multiples, and the red line shows what that median ratio was over the past 30 years. And a couple things to highlight here. One, we're nowhere near where we were during the 1999-2000 bubble from a valuation perspective. But secondly, the sector has typically over the past 30 years traded at about a 15% premium to the S&P 500. Well, that makes sense to us. The sector grows faster than the broader economy because it's driving productivity. So of course it should trade at a premium. Today it's trading at about a 25% premium to the S&P 500. So a little elevated versus that 15% level, but we also don't think excessive when considering the fact that this opportunity for, around digital transformation has accelerated growth in the sector, and the quality of the sector has really improved over the past 10 to 12 years as we've seen many of these software businesses transition to recurring revenue businesses. We've seen a reemergence of real growth in the semiconductor sector. And then we have found increasingly that there are many of these platform businesses in the technology space, businesses with really strong data and technology moats, and businesses with very strong EBITDA margin profiles and balance sheet profiles. So we think that some bit of an elevated valuation framework is appropriate given those improvements in the growth and the quality outlooks for the sector. Next slide, please. Now, let's dive into this big idea of digital transformation. These four companies, I would argue, are the digital transformation superstars, the real innovators in digital transformation, the companies that pioneered these techniques. They all learned how to use software and data to better understand their customers and business processes, and then those insights and technology to radically transform how their industries operated. So Uber, the world's largest taxi company, but they don't own any of their own vehicles. Facebook is one of the world's largest media distributors, but they actually don't create any of their own content. Alibaba, one of the world's largest retailers, but they don't have any inventory on their balance sheet. And Airbnb is one of the world's largest accommodation providers, but they don't own any of the assets that people stay in for the accommodation. So these are the companies that really pioneered these techniques around digital transformation and have woken the world up to the opportunity and the threat of not investing in digital transformation. So in this strategy, we want to own not only leading digital disruptors like this, but also those companies that are going to help our firm and maybe your firm go on this digital journey with their customers and really transform their businesses. Next slide, please. So what is digital transformation? Again, it's about using software and data to better understand your customers and business processes, and then using technology to radically transform how your industry operate. These companies do a really good job of turning their relationships with their customers from transactional engagements to lifetime value engagements that are constantly finding ways to expand the value of the relationship and extract more value and deliver more value to the customer. Now, COVID was, I think, a tremendous opportunity for not only technology in general, but more specifically for digital transformation. Obviously, over the past 2 years, our lives have been radically changed. Many of us have been working from home. Our young people have been getting educated at home. We've met with our doctors remotely. We've had to use much more e-commerce. The past 2 years has been an incredible training time for these digital transformation techniques, not only for the consumers of them, but for businesses. And what consumers and businesses have learned is that they can be more productive using these techniques. And our work indicates that as a result of that, they are leaning in more deeply into this opportunity, investing more in it, and trying to bring digital transformation to other parts of their business. So we don't think it is just an opportunity that was solely around COVID and goes away as the crisis ebbs. We think that it's something that is just getting started. And if you look at the work by IDC, they estimate that this digital transformation opportunity is at least $1.3 trillion in size. Now, I think that radically understates the opportunity, because we think just one leg of this opportunity, the cloud computing element of it, is $3 trillion on its own. So we think a very, very significant opportunity over the next 10 to 20 years. Next slide, please. So these are the 10 pillars of digital transformation. So again, the fund is anchored around the core being digital transformation, but across that core, we've come up with 10 sub-themes that are all in support of that big idea. And we seek to own only the best names associated with each one of these sub-themes. But let's quickly run through them. So AI and machine learning is all about collecting, analyzing, and understanding data in an automated way so it can be applied to your business processes and your engagements with customers. New commerce, certainly we're all familiar with the growing role of e-commerce in our lives, but increasingly, and certainly during the crisis, we saw many of these e-commerce techniques get pushed into the offline world and be used in regular retail. So we're seeing a blending of e-commerce and offline commerce, or brick and mortar commerce. Digital media transformation, an enormous opportunity, not only with the rise of the metaverse, but also cloud gaming. Microsoft estimates that there are about 500 million PC and console gamers on the planet. But as the gaming companies figure out how to stream their games and broadband becomes increasingly prolific, anybody with a broadband connection, and we estimate there are more than 1 billion people with high quality broadband connections, but that's growing substantially right now, is in scope for playing these high quality experiences. And Microsoft in particular, but other companies are experimenting with this right now, are acquiring content, figuring out how to build subscription bundles, much like Netflix did with video entertainment, and they're creating this huge opportunity around creating subscriptions and ultimately building the very beginnings of this opportunity for the metaverse. Secure cloud and SaaS, an enormous opportunity. Every single one of these digital experiences sits on the shoulders or on that the substrate of cloud computing and software as a service. I think this opportunity alone is worth $3 trillion in size. There's obvious leaders there like an Amazon or a Microsoft or a Google, but there's also less obvious leaders there that we're heavily invested in. Companies like Cloudflare or MongoDB or Confluent or even a Twilio, huge opportunity in cloud computing. Digital customer engagement is all about talking to your customers using these digital techniques. Salesforce is right at the center of that. Twilio is right at the center of that. This was obviously very critical during the COVID crisis. But again, businesses learned that customers wanted to be engaged with digitally and have these digital experiences. And we believe, and our work supports the notion that companies are pushing even further into this. Fintech and digital payments, that's all about facilitating e-commerce, certainly, but also lowering the costs of the financial services industry to bring more and more people into the financial ecosystem. So critical to that is blockchain technologies, cryptocurrencies, and of course, programmable money. So just a huge opportunity there. Electrification and autonomy. Obviously, we're in the early stages of transitioning the billion-plus automobile and truck fleet over to an electric future. In the strategy, we own names like Tesla and Rivian and Lucid Motors, but also less discovered names like Proterra or companies like an NVIDIA that are helping to enable the autonomous driving opportunity. IoT and 5G, probably less enamored with the things part of IoT, but I'm very interested in the data that comes off the things and how that ultimately helps businesses better understand their customers and their business processes. Cybersecurity, nobody is going to engage in this opportunity around digital transformation unless they feel confident that their data can be protected. Obviously, with the situation we're seeing right now in Ukraine and with Russia, cybersecurity is front and center in many people's minds as new battlefronts, new parts of the battlefield are open. So that's absolutely critical. And then finally, the future of work. At the beginning part of COVID, we were all shoved into our homes and quickly had to adopt tools like Zoom or Microsoft Teams to collaborate with our colleagues. But we believe that people are never going back to the office full time, and they're going to need more tools to automate work and to manage large and remote teams that increasingly will not be with one another in physical space. So that leads to opportunities for companies like Monday.com, ServiceNow, Atlassian, and again, also, of course, a company like Microsoft. Next slide, please. So about 5% of the portfolio is in these exciting private companies. You'll see that we've got about 17 names currently in the portfolio in the private space. These companies are critical to help us seeing disruption before our peers do. And then if we just went to the second to last slide, or excuse me, the last slide in the deck, the key points I want to make are we see a massive opportunity in digital transformation and the rise of the metaverse, which is really maybe the ultimate digital transformation opportunity. COVID brought the digital transformation opportunity into sharp focus. We think we've got the right team, the right process, a huge location advantage, and a long-term orientation that really allows us to invest in these names. We think valuations are a little elevated right now, but not excessive given the better growth we're seeing in the sector now and the very high quality. And finally, we want to own the leading digital disruptors in digital transformation and those companies that are going to help firms like our firm and your firms go on this digital journey to help engage with their customers and understand their business processes more deeply. I can end it there and we can take Q&A.
Muchas gracias, Jonathan. Vamos a pasar al turno de preguntas. Empezamos por Jonás. Si te parece, Jonás, tiempo para ti.
Muchas gracias, Jonathan, por tu tiempo y por tu speech. Yo quería hacerte una pregunta que tiene dos partes. Me gustaría saber tu opinión sobre semiconductores y sobre tecnológicas asiáticas y cómo puede impactarles un riesgo geopolítico vinculado a Taiwán.
Yeah. So semiconductor space right now is very interesting. We believe that the growth opportunities in the sector are really being elevated for a number of fronts. Number one, the very big market for semiconductors is PCs. We're starting to see real structural growth return to the PC market, but there are also new growth drivers in the sector, including electric vehicles, which are much more intensive on the usage of semiconductors. We're seeing this huge opportunity around IoT and 5G, which all lead to creating data off of these devices. And then finally, these big opportunities around AI and machine learning require much more semiconductor intensity. Now, clearly, a lot of the world's most advanced semiconductors are manufactured in Asia, most notably in Taiwan and in South Korea. And certainly, we are paying very close attention to the geopolitical risks that are going on in the world right now, and how that might, encourage China to think differently about Taiwan. We are encouraged to see many of the Western governments, European governments, the U.S. start investing aggressively in getting semiconductor production capacity in parts of the world that are not Taiwan and South Korea. And we think that ultimately is very bullish for the semiconductor capital equipment companies. Names like ASML, names like Applied Materials, KLA, we are seeing a tremendous amount of fab investment going in, not only to deal with these geopolitical risks that you highlighted, but also to deal with the real secular growth that we're starting to see in the sector on many of the themes that I just highlighted. But listen, there are no quick fixes to this, these geopolitical risks. It takes many, many years to build a fab and to get it to yield semiconductors that are high quality at appropriate prices. And so, there's a lot of work ahead, which I think, again, is very bullish for the semiconductor capital equipment companies that are levered to the building of these fabs outside of Asia.
Vamos ahora con una pregunta de Álvaro.
Muchas gracias, Jonathan, por la presentación. Yo te quería preguntar sobre el e-commerce. En 2020, a raíz de los confinamientos, vimos una fuerte adopción por parte de los consumidores del comercio online. Sin embargo, con la reapertura de las economías, hemos vuelto a ver cómo ciertos consumidores han vuelto hacia el comercio más local, en persona. Yo te quería preguntar cuáles son un poco las perspectivas en este momento y dónde veis oportunidades en el segmento.
Yeah, so certainly e-commerce proved to be critical during the lockdowns, and importantly, new categories came into scope for e-commerce, grocery shopping, and a lot of the techniques for e-commerce we saw move into the offline world. As if I would go shopping at a local retailer, oftentimes I was doing my ordering online, but then getting a notification over a text message, and somebody was delivering it to me in the parking lot. So it was almost sort of like a pseudo e-commerce experience. Now, clearly, we are in a stage of reopening and people feeling confident about going back out into physical retail and shopping the ways that they did previously. But I think that a lot of retraining occurred over the past 2 years, and people found new ways to use these techniques, and stores and commerce providers, physical retail providers, found that they could also deepen their relationships with their customers if they adopted these techniques. And we are seeing, in fact, continued investment by brick and mortar retailers in these online channels, and we are seeing that consumers are continuing to use them at high rates. But absolutely, we are in a bit of a period of tough comps right now. We think we're going to get back onto trend growth. Right now, we estimate 22-ish% of US commerce flows through some sort of online platform. As distribution gets closer to the end user, as more and more categories get put onto these big platforms, we think that that can double in the years ahead. So we still see a lot of growth ahead, not only in established markets, but also many emerging markets, South America, Central America, throughout parts of Eastern Europe, and still many parts of Asia are still very early in the opportunity for e-commerce.
Jonas.
Jonathan, los clientes y los electores tenemos un gran abanico de fondos tecnológicos en los que podemos invertir. Me gustaría saber si para ti es una ventaja competitiva de Franklin Technology estar siendo gestionado desde Silicon Valley.
Yeah, I think this is a huge advantage for us. We estimate still more than half the world's venture capital is deployed here. So that means that we are sitting right in the middle of the place where this capital is being deployed, where these entrepreneurs are active. The people who lead these companies, work at these companies, are our friends, they're our neighbors, our kids, play sports with their kids. It's a tremendous environment to be doing our work in. Now, we also understand that innovation is not just unique and captive in Silicon Valley, and that's why our analysts absolutely cover the world globally. Franklin is an enormous platform, and so when we need to be able to get deeper insights into various parts of the world, we can get access to analysts on the ground in Asia, in China, in India, throughout Europe. But being in Silicon Valley, where the world's largest technology companies are, where still more than half the world's venture capital is deployed, is a huge advantage for us. And we are regularly working our networks and our relationships with these smaller companies. That's why our investments, most notably in these private companies, are so critical, because it really gives us a front row seat in many of those very important companies and those themes that we need to be on top of, and that disruption that we need to see before our peers.
¿Ahora?
Jonathan, desde finales del año pasado hemos visto un cambio de tono por parte de los bancos centrales, y los mercados ya están empezando a descontar las subidas de los tipos de interés, lo que ha provocado ciertas caídas en los valores tecnológicos, sobre todo aquellos los que cotizaban a unos múltiplos más exigentes. ¿En este periodo habéis aprovechado para hacer algún cambio en cartera o incluir alguna compañía que ahora cotiza a unos múltiplos más razonables?
Yeah, it's a great question. So certainly we've seen a lot of pressure in growth companies over the past 3 months as investors have worried about the impact of inflation and how that's going to compel central banks to get more aggressive with rates. And certainly we understand that higher rates necessarily reduces what investors are willing to pay for some of these companies. But it also has caused massive resets in some very high quality growth businesses with excellent unit economics. And so to your question, we have absolutely been putting cash to work in many companies over the past 3 months. Going into the middle of November, our cash rates were above 3% of the portfolio. Today, we are down in the 1% range. And so we have absolutely been taking advantage of some of the resets we've been seeing and putting capital to work. And we've been through this before. The strategy's been around for more than 20 years. We have seen interest rate shocks in the past. And typically what we've done during those periods is taken advantage of that volatility and added to our highest conviction positions. And that's exactly what we've done here.
¿Una más, Jonás?
Venga, yo pregunto una más. Muchas gracias, Vicente. Jonathan, hemos visto que estabas en el fondo no jugando, sino viendo interés por 10 temáticas, y una de ellas con alto potencial, que es la de metaverso. ¿Nos podrías dar algún nombre en los que estás invertido actualmente para capitalizar el potencial que tiene esta temática, por favor?
Yeah, great question. So there are many names in the portfolio that are levered to this big opportunity around the metaverse. Microsoft is already one that I mentioned, but I think one that I don't think investors fully appreciate is a company called Roblox. And this is a great example of the value of us being in Silicon Valley. As it turns out, Roblox is our tenant at Franklin Templeton. Their headquarters are on our campus in Silicon Valley. But Roblox is a tremendous user-generated content platform for gaming that started with young people. Many of our students, maybe your children, play on the platform, but it's starting to age up, and it creates a VR augmented reality experience for gaming that has an economy built into it, that allows users to generate content and get paid for that content. And it's just a fun experience. And importantly, it works on all of today's computing devices, iPhones, iPads, Chromebooks, Windows-based devices. You don't need specialty hardware to be using it. Growing at a very, very fast pace, aging up nicely, seeing a lots more revenue flowing across the platform. It's become a big position for us in the portfolio. I think a really exciting company. And again, one that I think, have unique insights into because they are our tenant at our headquarters in Silicon Valley. Many of the leadership at the company are folks that we are very close with. And it's just, I think, got a huge potential ahead of it.
Y para terminar, tenemos un minuto, un poco más, para una pregunta. O sea, es una pregunta flash y una respuesta también express, Jonathan. Por favor, Álvaro.
Fenomenal. En los últimos años cada vez hemos visto más ataques informáticos a las empresas y yo creo que se pone en el foco la ciberseguridad. ¿Cuáles son tus ideas en este sector y qué peso le das en cartera a esta temática?
Yeah, so cyber is absolutely critical to successful digital transformations. We estimate 10 to 15% of the portfolio is invested directly into cyber companies or parts of businesses that are benefiting from cyber. And it's a little hard to tease out because Microsoft, for instance, is a massive company. A portion of its business comes out of cyber. But some of the big names in the portfolio that are directly associated with cyber: Cloudflare, one of the leading website protection platform; CrowdStrike, an emerging endpoint security platform that has proven essential in dealing with some of the most sophisticated attacks on the planet; Okta, a critical identity player that helps implement two-factor authentication that is essential for securing assets. And then, of course, endemic to the Amazons, the Microsofts, the Google Cloud platforms is security built in. So those are some of the names in the portfolio that are levered to the cyber opportunity.
Pues muchísimas gracias, Jonathan, por estas respuestas a las preguntas de nuestros selectores hoy. Y muchísimas gracias también por tu presentación. Ha sido un gusto tenerte con nosotros hoy.
Great, thank you so much.
Muchísimas gracias, por supuesto, también tanto a Jonás como a Álvaro por vuestras preguntas muy interesantes, desde luego. Gracias a los dos.
Gracias, Vicente.
Bueno, pues hemos llegado al final de esta primera jornada de BIOS 6. Ya veis que os traemos ideas que pueden ser interesantes para aprovechar todos estos movimientos que ha habido en mercado, pero con visión de largo plazo, como siempre os decimos desde Finect. Simplemente recordar que tenéis en el grupo de BIOS en Finect, tenéis toda la información, las fichas de los fondos, las presentaciones de los gestores. Iremos subiendo también los vídeos en diferido, o sea que ahí tenéis toda la información. Este ha sido solo la primera sesión, pero ojo que mañana tenemos el segundo día de BIOS 6 con otras 2 ponencias bien interesantes, no las perdáis. Nos vemos mañana.